Hello, my name is Shreyans, and this is a series on developing your equity research process. Up till now, we've talked about making the financial statements in our Excel workbook, doing comparative and common size analysis, also applying some forensic techniques. And before we move on to the ratios, there is one another topic that I want to briefly discuss, which is regarding operating segments, right? So we discuss about operating segments more in detail when we try to understand the business of the company, but since we are on the financials of the company, I also want to introduce this particular topic and think of it that how can we get initial insights into the different operating segments of the business. So let's get started. All right. Now, first, let's understand that what really are operating segments and how do we define them, right? So there are definitions as per the IFRS, which says that, an operating segment is one which has greater than 10% of the company's assets or contributes greater than 10% of the company's revenues, and companies have to separately report that, right? But generally speaking, we can just understand an operating segments as distinct parts of the company that earn revenue and incur expenses. So you can think of them like separate divisions within a company, right? So that is an easier and a more intuitive way to really think about operating segments, right? Right. So think of it like a company within a company or a mini company or divisions or not departments, so to speak, but yeah, divisions might do. Now, how can companies really define operating segments is the next question, right? So how does it classify that, okay, this is a different operating segment, and how does it report it in the financial statements? So the classification can be based on several things, first of which are product lines. So if a company is selling different kinds of products, right? So for example, there are FMCG companies which might be selling products related to food and beverages, then there might be related to personal care or home care or something like that. So those could be different product lines or even departments, right? Then there can even be different businesses. For example, we have conglomerates, right? For example, like a Reliance or an ITC, right? So ITC would report its results with the cigarette business separately, then FMCG business, then agri business, then paper business, right? Or a Reliance would report petrochemicals and telecom and retail, right? So those could also be segments. Then geography, right? So a lot of companies export, right? And they might define operating segments based on where they export, right? So for example, you find that IT services company, they define their region. So there is North America, the South America, there is Europe, there is Japan, there is rest of the world, and they report their revenue with respect to that as well. And finally, we have industry served, right? So different companies may not just serve one industry but multiple industry. Like again, if we take IT services companies as an example, they service companies in the banking and financial services space, then in the entertainment space, in healthcare space, or in education space, and they might report their results with respect to that. Or a lot of pharmaceutical companies also serve different kinds of industries, right? So they might also a lot of API companies also, for example, they might provide to chemical companies or to pharmaceutical companies or to any other type of companies that makes probably, let's say, plastic related products or any products that require those materials or those products, right? So these are the bases on which segments can be classified or segments can be defined, right? Now, what is the information that you would find with respect to these segments, the financial information, so to speak? So it is not like that a company will report separate financial statements for each operating segment, but they would report this key financial, so to speak, with each segment. And mostly what you would find is that there'd be a particular note called segment reporting towards the ends of notes to accounts, right? It would be at a later part of the financial statements, and you'd find these four things: so revenue, profit before tax, assets, and liabilities, right? So in most cases, revenue is, distinguishable, that this revenue is coming from this segment, this is from this segment. Now we take profit before tax because profit is paid by the company as a whole, and in most cases you'd find that they would just add the profit before tax of all the operating segments, then they show tax as whole and then the net profit, right? Assets and liabilities. Now with assets and liabilities also, what you would find that there are quite a few common assets and common liabilities for the company as a whole, and there are few directly attributable assets and liabilities. So to the extent that the company can, distinguish that a particular item, whether an expense or an asset or a liability, and revenue obviously can be attributed to a particular operating segment, so they would report that, right? There are some expenses or there are some assets and liabilities that accrue to the company as a whole, and those would not be, it would not, the information would not be broken down to that stage. But I think even this much information is sufficient to start our analysis, right? And what are the different things that you could analyze, the basic analysis that you can do, right? So the things that you could calculate are obviously the profit margins, right? And you could first figure out what is the largest segment by revenue in most cases, and then it is also possible that one segment has the largest revenue but other segment has the largest contribution to profit, right? Because one segment might be hugely profitable while other segment might be large, but it might not have that much of a profitability. So again, we could also look at the most profitable segment, right? That where is bulk of the profits coming from. Then you have segment growth rates. Now this is also very important because this would give you an idea about which operating segments or which kinds of businesses are the drivers for future growth, right? So, and you can also understand that, okay, is the company focusing on these particular segments or not when we move on at the later stages of our analysis. And finally, we can also understand the contribution to the total revenue and the total profits, or the percentage of assets and liabilities that are being allocated to a particular segment. So this would give us a basic idea of which lines of businesses or which businesses itself are important to the company, and how is the company really, allocating capital with respect to these businesses, and a lot of more information that we can figure out as we move ahead. All right, so that was pretty much it for this time round. I hope you were able to get an idea of operating segments, and we discuss the different segments and how to analyze and understand different segments later when we talk about the businesses and the business model of the company as well. This time it was just to get a brief or an overview or financial idea about the different operating segments, so that when we collect all our observations, all our financial observations, we also have few observations that are related to particular operating segments, so that we can do our research better as we move on. So that was pretty much it for this time round. I hope you were able to learn, and I'll see you in the next video.